Ladies and gentlemen, boys and girls, welcome to FinFluential Media. I am your host with the most, Chase Money. Yes, last name is Money, and what a day, what a week, what a year so far it has been. We're going to talk about it, guys. We're going to talk about everything, the wild swings we saw in the S&P 500 and why this is actually incredibly volatile, relatively speaking. We're going to talk about some market movers in the after hours and some potential stocks and places you can hide that I think will appreciate for the rest of the year because there are some tailwinds. And it's not just healthcare stocks, guys. We got a number of them. We're also going to talk about the market cycles, why we're seeing the moves we are and how it pertains to investors and their emotions. And then we're going to bring all that back to what we're seeing in the real world with the same cycle of emotions, what we're seeing with brokers and brokerage firms, and also what we're seeing with even billionaires capitulating. And then we're going to talk about how the president is fixing it, some stocks I bought, and stocks you all should buy during this dip. But before we get into it, guys, could you please go ahead, like and subscribe? It really helps a small channel like this out. Let's dive in. So let's actually quickly talk about some of the market moves today. Now the S&P 500 was only down 0.2% today. And that's because we saw some green in some of these big sectors. Stuff like technology equipment led by Nvidia was up 0.73%. Software and IT services was kind of flat. Healthcare was kind of flat. Retailers was kind of flat. Every other sector was red, from energy to utilities to financials to telecoms. But we did see some positive sectors despite all of the pre-market action. And we had an incredibly volatile day today in the S&P 500. We opened right here. Now, this is only up until 11 a.m., right? So we opened right here and the markets, the S&P 500 fell nearly 5%, right? So hypothetically, guys, if the market had closed, let's say the market closed at the negative 4.5% mark, that would have been the worst 3-day change ever of negative 14.4%. Absolutely insane. The only other times we've had 3-day changes like equal to that was sort of here in 2008, 1998 down 12%, 2008, 2020. So the only time we see these types of numbers is when there's like a financial crisis, a credit crisis, a pandemic. So to see the moves we're seeing in the market that we've seen over the last couple of days is virtually unprecedented. Absolutely insane. Now, we got some news from Trump. He was potentially looking at a 90-day tariff ban. Turns out it was fake news, but the market ripped 8% on the back of that news. Now, we did pair a lot of those gains, right? And we did go negative. Now, this all happened within 1 hour. This is all literally 1 hour. We went from deeply negative to very positive to kind of negative, back to positive 15 minutes later. And then by 11:30 a.m., we were sitting at negative 2% in the S&P 500. I can tell you, neither the bulls nor bears won today. Everybody got stopped out except the longer term investors who were like, what is going on? It was a massively insane day, extremely volatile last 3 days. And things are getting crazier. CVS Healthcare, and it's not just CVS, United Health, Humana, are all rallying here in the after hours because Trump reported, or Trump's administration reported, that they will raise the payment rates for Medicare insurers next year up 5%. This is much higher than the 2.23% proposed by the Biden administration. Humana stock was up 13%. CVS was up 6.5%. United Healthcare was up 7%. And some of these stocks are doing very well this year. CVS Health is up 43%, looking very defensive. United Healthcare coming into today was actually flat on the year, up 7% in the after hours, looking very good. So look, if you are looking to hide in equities, healthcare is what you want to look at, especially in times like these, because the earnings variability tends to be very stable. We saw Broadcom was up 3% as well in the after hours, following the company's authorization of a new $10 billion share repurchase program. I think all of these management teams are probably going to come out and say, hey, look, we're going to buy back a ton of our stock since we're down 20-30% off our highs. And I think that's great capital allocation, particularly looking at the semi space. A lot of semi names look very attractive. I'm looking at Nvidia. I'm looking at Broadcom. I'm looking at Marvell. They're down 30-40% off their highs. I mean, they probably go back to all-time highs, assuming hyperscaler capex remains where it is right now. And then I think the biggest mover today, Levi Strauss. These guys sell jeans. They reported their earnings. Now, the stock was up 8% here in the after hours. It reported adjusted earnings per share of 38 cents. That's a 52% jump compared to the prior year. Revenue, they reported revenue of 1.53 billion for the period. That jumped 3% over last year and reiterated its full year outlook. The forecast, however, excludes impacts from the Trump administration tariffs. So like I said, they probably reserve the right to revise their guidance, but they're saying if Trump's tariffs, if nothing happens regarding Trump's tariffs, everything's a go. Our guidance remains as is. And I think they're looking for about 3% growth year over year and continued slight margin expansion in their business as they sell off unprofitable lines. They're very good earnings. And I think this is going to help like the retail space, the staple space, the discretionary space tomorrow. This is exactly what the market needed in ahead of Q1 earnings. Now, let's talk about the market and where we are, guys. You know, just a month ago, like middle of February, we were here at euphoria, peak euphoria. We are probably now at the panic and capitulation zone. We are probably in the middle of panic. We saw panic last week and we're seeing capitulation right now. I would say that right now we're probably closer to the capitulation zone. What happened in Europe, what happened in Asia, what happened in China with their stocks, that felt very capitulatory. And I think what we need to see is a couple of days where we rally and then reverse just to create that despondency. That is when we'll probably near the bottom, get some good news from Trump, and then up and away. And this is why I've started deploying capital. And I'll show you today some of the stocks that I bought. Donald Trump himself has literally brought on Apple's upgrade cycle. We're getting reports from Forbes that the Apple iPhone panic buying is reported before possible price rises. Apparently, Apple stores were packed out over the weekend at the newest iPhone before the tariff situation escalates. And to be honest, I would probably be doing the same if I was in the US. So this right here, guys, is a sign of capitulation. Some more signs we're seeing. Charles Schwab came out. They released this email, look, their take on the market and pretty much telling their retail customers and just customers as a whole, hey, just calm down, okay? Just calm down. If you need help, you can give us a call, and they're open 24 hours a day. Can you believe that? So all it took was a major financial collapse in stocks, and now we're getting all of these capitulation signs. Billionaires too. Bill Ackman was very, very active yesterday. He came out and pretty much said, hey, Donald Trump, I'm with you. I voted for you. However, the way you're going about the tariff policy is not okay. And then he went on a huge rant and he said, I just figured out why Howard Lutnick is indifferent to the stock market and the economy crashing. He and Cantor are long bonds. He profits when our economy implodes. Bill Ackman went on to say that he's long America, but to be honest, being long bonds is also long America, if you ask me. And then he walked all this back saying it was unfair for me to lash out at Howard Lutnick. Guys, this is literally emotional tweeting. I don't think he is pursuing self-interest. I'm sure he's doing the best he can for the country while representing the president as Commerce Secretary. It's not an easy job. I don't know how the sausage was made. Blah, blah, blah. Guys, these are all signs of capitulation, but it's not signs of despondency just yet. I said this in my live stream yesterday. When you go to bed crying, or when your wife is in bed crying about your money situation, that is despondency, and that is the time you want to full port longs. Okay, next, what is Donald Trump doing about this? Now, this is very, very interesting. Donald Trump, he's come out and said they're engaging with 70 countries right now. He had Israel's president or prime minister over, Netanyahu. He's having Japan over the next couple of days and a couple of other dignitaries. He's talking with a whole bunch of EU countries. He's talking with a whole bunch of Asian countries as well. So there is things going on. This is creating the wild swings we're seeing in the market. And ultimately, guys, from everything I've read, what Trump wants is countries to lower their tariffs overall, as well as their non-tariff barriers, stuff like GST, stuff like VAT, stuff like anti-American subsidies, right? And these conversations are going to start happening. I think we're going to get some positive news over the next couple of weeks, especially as it pertains to some of these countries like Vietnam, Taiwan, Japan. I think China is going to play a little bit of hardball. I think the European Union is going to play a little bit of hardball. But I think the majority of the bad news is behind us. The majority of the bad news is priced in. And from here on out, I think it should just be pretty clear skies ahead. Now, I did go ahead and make some purchases yesterday. I only actually just purchased one stock. It's an ETF, QUAL. You can see here I purchased 67 shares yesterday, 200 shares yesterday as well. And then I got 4 today because the order was still ingoing. I think there's still maybe 20 or 30 that may have been executed. But yeah, I spent quite a lot of money on stocks. And I will continue to buying some of my index positions over the next couple of days. I will also be looking at quite a number of US stocks. Now, what US stocks do you ask? I have an entire thread here for you guys. It's very brief. We're going to go over it. We're going to read it. This is what you should be buying if you're looking at individual names, not ETFs. And I will be buying some of these over the next week. Now, the stock market is crashing, but Bill Ackman may have just called the bottom. As you can see right here, whenever Bill Ackman goes on his massive rants, guys, his COVID rant, persistent inflation pressures rant, treasury market volatility rant, and his tariff tantrum yesterday, that is when the markets tend to bottom. And you can see that the average return 12 months later, 32%. So here are 8 stocks that I think can do very, very well. Number 1, NVIDIA. AI is just getting started. And this isn't just a chip stock. It's the foundation of the AI revolution, guys. So anything below $100 is a gift, okay? AI is the future. NVIDIA is the toll booth. PayPal. Everybody's sleeping on this one. Its valuation has been crushed. It's trading at 11 times EV to free cash flow. Fastlane is a game changer, and the company is set to buy back 11% of the float at today's prices. When sentiment flips, PayPal won't stay this cheap, guys. Next stock, Hims and Her Health. Direct-to-consumer health is exploding. Margins are improving. And Hims just turned profitable. Gen Z is buying pills online. Hims is where they're going to do that. Evolution AB, one of my highest conviction plays over the next 5 years. A lot of you, if you don't follow me, if you're new to this channel, you're probably seeing or hearing about this one right now. But this is a company that dominates the live casino segment, 75% market share, printing cash with 80% profit margins, underrated beast in a growing industry. It pays a 4% dividend yield. It's buying back stock, trades at 12 times earnings. I don't know why you don't buy this stock. It's such a good buy. Wide mode, insane margins. I love the name. I am long Evolution. Alphabet is a cash machine with a wide moat. Sometimes it's best to just buy the leader. Don't overthink it. YouTube dominance. Search is still king. They're in the AI arms race. The stock has pulled back. It's time to get in. I think anything under 160 is a bargain. Meta Platforms I own. Zuck went full AI mode. Llama is the leading open source AI. Reels is booming, Threads is growing, and they still dominate the attention economy, trading at 17 times earnings. Uber, another stock I like and I really do want to buy. They're finally profitable and they're buying back shares, guys. Rides plus Eats plus ads is a money printer. This isn't just a ride-hailing app anymore. It's data-driven logistics empire trading at 15 times trailing 12-month earnings. And finally, Robinhood. Controversial? Yes, but it's growing its user base, it's profitable, it's launching advanced tools for serious investors, and Robinhood is quietly evolving from a meme stock casino to a full-service brokerage for the next generation. Now guys, markets may look scary right now, but fear is simply opportunity, and these are the best bets looking out 5-10 years. I think if you buy these right now, you'll do very, very well if you have a long-term mindset. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, and leave a comment for the algorithm. Cheers.